What if the world's most powerful financial institutions, the same institutions that issue money, control interest rates, and stabilize markets, are preparing for something they are not openly discussing? Not through press conferences, not through policy speeches, but through physical gold purchases on a historic scale. According to the World Gold Council, central banks purchased over 1,082 metric tons of gold in 2022 and another 1,037 metric tons in 2023, the highest annual purchases since records began in 1950. Preliminary 2024 data shows this trend continuing at near record levels. This behavior is not driven by speculation. It is not driven by profit. It is driven by systemic risk management. This video will explain what the data shows, what research institutions conclude, what historical patterns confirm, and what this means for the global financial system and for you. Let us begin with empirical evidence. According to the World Gold Council 2023-2022, 1,082 tons purchased, highest ever. 2023, 1,037 tons purchased, second highest. 2024 partial, on pace to exceed 900 tons again. Major buyers include People's Bank of China, Central Bank of Turkey, Reserve Bank of India, Central Bank of Russia, Middle Eastern sovereign monetary authorities. This gold is being purchased as physical reserves, not financial instruments. According to IMF COFA data, gold now accounts for over 15% of total global reserves, up from about 10% a decade ago. Meanwhile, the share of US dollar reserves has declined from 71% in 1999 to approximately 58% in 2023. This is not coincidence. This is reserve diversification driven by risk assessment. Let's examine this from a theoretical and empirical finance perspective. Gold as a store of value, academic evidence. Research published in Journal of Banking and Finance Bohr and Lucy, 2010. World Development Capi et al., 2005, IMF Working Papers. Findings that gold acts as a hedge against inflation. Gold performs as a safe haven during financial crises. Gold is negatively correlated with systemic risk indicators during stress periods. Gold versus fiat currency, empirical comparison. According to historical currency lifespan studies, average fiat currency lifespan, approximately 35 years. Every fiat system in history has eventually collapsed or been replaced. Gold has maintained purchasing power for over 5,000 years. As economist John Maynard Keynes once wrote, gold is the ultimate form of money. Now let's examine the most critical macroeconomic variable, debt. 1. Global debt levels. According to the Institute of International Finance (IOIF), 2024, global debt exceeded $315 trillion. This equals over 330% of global GDP. Breakdown: government debt, $92 trillion. Corporate debt, $95 trillion. Household debt, $58 trillion. Financial sector debt, $70 trillion. 2. Debt sustainability research. According to IMF Debt Sustainability Framework, when debt exceeds certain thresholds, growth slows. Interest costs crowd out productive spending. Monetary authorities face pressure to monetize debt. According to Reinhardt and Rogoff 2009, high public debt levels are associated with lower long-term growth and higher financial instability. 3. Monetary expansion. Since 2008, the Federal Reserve balance sheet expanded from $900 billion to over $8.7 trillion. The ECB expanded from €2 trillion to over €7.5 trillion. The Bank of Japan expanded to over 130% of Japan's GDP. This level of monetary expansion has no historical precedent outside wartime economies. Central banks are legally independent, but empirically constrained. Research findings, studies by IMF, Bank for International Settlements BIS, OECD, conclusion. Political pressure increases during fiscal crises. Governments favor low interest rates and monetary accommodation. Inflation risk is tolerated to preserve political stability. This creates moral hazard and currency debasement risk. Gold, in contrast, is politically neutral, inflation-resistant, independent of central bank discretion. The global financial system is fragmenting. According to World Bank and WTO reports, global trade is increasingly conducted in local currencies. Bilateral settlement systems are expanding. Dollar dominance is declining structurally, not cyclically. According to BIS 2023, cross-border financial flows are becoming more regionalized. Financial blocs are forming. This is driven by sanctions risk, asset freezes, political uncertainty. Strategic autonomy, gold is sanction-proof, politically neutral, universally accepted. Therefore, it becomes the anchor asset in a fractured system. Research institutions do not predict collapse, but they do predict transformation. Possible outcomes: multipolar reserve currency system, regional currency blocks, digital currencies backed by real assets, reduced reliance on fiat systems, increased role of commodities and gold. According to BIS Annual Economic Report, the international monetary system is undergoing a structural transition. Gold accumulation is not speculation, it is pre-positioning. Empirical evidence shows that during periods of inflation, currency devaluation, financial repression and geopolitical instability, households that diversify assets, hold real assets, maintain financial literacy, experience greater resilience and lower financial stress. This is supported by World Bank Household Finance Studies, OECD Financial Literacy Research, IMF Inequality and Crisis Impact Studies. To sum up, central banks are not panicking, they are preparing. Gold accumulation is not about profit, it is about survival of monetary credibility. This does not mean collapse is guaranteed, but it does mean transformation is inevitable. The greatest asset in times of transformation is not gold. It is understanding. If this video added value, like, subscribe. Comment your perspective. This channel exists to replace fear with clarity and confusion with knowledge.